Hey guys, welcome back to Click Capital, your go-to channel for market analysis and all the latest data and charts from the markets. I'm going to share with you my insights from 20 years of trading, let you know what's going on with this Silicon Valley Bank thing. There's been a few new developments over the weekend. Things are currently unfolding. There's just been an announcement come out from the Fed, which I'm going to get into, and people have been panicking over the weekend. So I'm just going to do this special update to keep you up on the latest and let you know what else is happening, what the insiders were doing in the stock, some suspicious trades, and then I'll finally let you know what the futures markets are doing. So there's been people lining up in branches, regional banks over the weekend, fearing that their bank's next. So that after the bank run on Silicon Valley, Feds took over it. It's going to be wound up. Now there's fears of contagion and whether the whole sector of regional banks is going to face a run, but I don't think so. I don't think you need to worry. I don't think you need to be like this guy here and running to the ATM machine, because there is federal insurance for up to $250,000 in deposits, and the Feds they will backstop the rest, which they basically have just come out and said they're going to do with Silicon Valley Bank to prevent fear and a whole run on the sector. So equity holders, of the common stock will be wiped out, but all deposits will be rescued. They should get at least half of it back on Monday, and the other half might take a few months to get through. So everyone should get their deposits back. So there is no need to panic. This is not like 2008. The banking sector is well more capitalized and monitored and regulated and less leveraged. This does at this time look to be an isolated incident with Silicon Valley Bank and how they stuffed up their investments in long-dated treasury bonds. They didn't hedge their interest rate risk at all. Reckless treasury management on their behalf. But of course, the insiders did well for themselves. And just another case of, the moral conflict in the financial system where, the managers, it's risk for thee, not risk for me. And we can see here, Greg Becker, CEO. Last year, almost $10 million in compensation paid to him. CFO, $3.7 million. Getting paid millions. This is not a huge, $100 billion company. This is a 16th biggest bank. So pretty generous on their own compensation and stock-based compensation. We can see it was only 10 years ago that was $22 million, and they got that up to $183 million last year. And look at this. Greg Becker, CEO, Silicon Valley Bank, sells $3.6 million in stock on the 27th of Feb. Hadn't sold any stock for over a year. And same with the CFO. What absolutely lucky timing. How convenient. Also the CMO offloading stock as well. So unbelievable how often we see this. Everyone, their customers at risk and going to have to go through all the stress of getting their money back. All these new startups can't make payroll. Putting the whole system under the fear of contagion. Stockholders in multiple regional banks taking big losses. The market on edge. A lot of people upset, but here we have the CEO getting paid tens of millions of dollars and then selling $3.6 million of stock, not even a couple of weeks ago, basically. So is he going to give that back? Probably not, or he'll probably have his lawyers defend it as much as possible, like we always see. So just really disappointing to see that, like on top of their stock-based compensation and salaries, he's also offloading stock to public because he can probably see what was about to happen, a run on deposits and that. So they've planned all this pretty well. They talk with the VCs. They've got big insight into the industry and the deposits, and they know how banks work and bank runs work. So this is all very convenient for them. What about Wall Street analysts? Did they help us out? Nope. 0 sell ratings on the stock a few days prior to it going bankrupt. So Wall Street couldn't help us out. What about the media? What did they think? Forbes ranked them best bank for America's best banks in the annual ranking for the 5th straight year. So no help from the media. What about everyone's favorite stock advisor, Jim Cramer? What did he have to say about Silicon Valley Bank barely a month ago on Feb 8? Let's listen in.
The 9th best performer year to date is SVB Financial. Don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB, it's the old Silicon Valley Bank, has always been a very good business. Recently bought one of our favorite research firms, Buffett Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year, they could come back. Yes, some of them come back here with the stock directly affects an oversold position. In the blast zone, stock was the 4th worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, stock's still cheap. Long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing 2/3 of your value, you need a 200%.
So old Jimmy Chill says it's cheap. It's a great business. It's in his top 10 buy list. This guy's unbelievable. How often he's wrong and how big he's wrong, yet he's still paraded by CNBC as the ultimate stock guru. The guy's an absolute clown. Look at this on Bear Stearns, just 6 days before Bear Stearns got wiped out in the GFC.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No. Bear Stearns is fine. Do not take your money out. This is real. Look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Okay, just so you get a sense of what's causing the agony by this point, I know you've been talking about it. It's financials led by Bear Stearns after what essentially is a bailout from the Fed. Bear Stearns shares are down 90% this morning, and it's not just...
6 days later, Bear Stearns shares down 90%. It wasn't Jim just saying, be careful or, maybe, pull back. He explicitly said, don't take your money out. Don't be an idiot. Keep your money out. And sure, some people might say, how's Jim supposed to know Silicon Valley's going to go under or Bear Stearns is going to go under? You're looking at hundreds of stocks. He's recommending hundreds of stocks. Well, that's exactly the point. He's recommending hundreds of stocks. He's literally telling you directly, buy this. I recommend you sell this. Don't do this. Do this. Do that. How many billions of dollars has Jim cost investors? We know Cathie Wood's racked up over $10 billion in net losses in her ARK fund while collecting $300 million in fees for herself and her firm. But what about Cramer? How many billions of dollars in losses has he caused people? I mean, look at this. This is quantitatively looking at Jim Cramer's picks. Takes a short position in his 10 most recommended tickers. And we all know S&P fell 20% in 2022, but inverting Jimmy produced almost a 10% gain. So that's like 30% in outperformance. That's not just like a little bit. That's like he is chronically wrong, more than random. And look, what about his company, The Street, he started in the late 90s and hyped up and flogged off to retail investors. What did that do? Down over 20 years until it was finally taken out for peanuts. So how many billions did he lose in The Street.com, TST, over 20 years? Again, unbelievable. I don't know how this guy's not in jail. Like, he's just constantly recommending people to do stuff costing billions of dollars, parade himself as the ultimate guru, but he's chronically wrong. Can he entertain? Yes. Is he a dancing clown? Yes. Is he a good stock picker, investor? No. So it's just unbelievable this clown gets paid millions of dollars from CNBC to, go on his show, tell you how to lose money, and in addition to that, try and pimp his books to you and all the other crap he's trying to sell. So, yeah, just thought I'd highlight that. Look at this. Suspicious Silicon Valley Bank options trade generated $1.2 million profit within hours. on Tuesday, March 7, just after 11, shows a trader purchased $4,000 worth of put options, strike price of $200, expiring on the 17th. They took all the volume available at 13 cents per contract on the ask, and just over 24 hours later, the bank announced it needed to undertake a share sale. So basically, the 13-cent contract went to $39.10, and the trader exited their position on Thursday morning, turning the $4,000 to $1.2 million. Gee, what another coincidence. I wonder who that was. Someone got tipped off there. What about the rating agencies? Did they save us? Oh yeah, Moody's downgraded credit ratings on Silicon Valley Bank on March 11 after it happened. So yeah, they will say we did downgrade it, but they downgraded it afterwards. So that was bad timing there as well. Treasury Secretary Janet Yellen says US government won't bail out Silicon Valley Bank. So, there's a lot of public anger when these too big to fail things get bailed out. We see the CEOs cashing in millions of dollars in salary, risking everyone else's livelihood except their own and getting paid tens of millions for it. And the CEO will probably go on to some other job. He'll get paid tens of millions to risk other people's money. He can sell millions of dollars of stock a few weeks before it happens. And he'll probably have his lawyers get him out of it, maybe with having to give back half at the most or something like that. US marshalling material action to stem Silicon Valley Bank sources. So if you're watching the channel, I said to you the government is going to be getting together in their closed-door meetings, and they're going to come out with something when futures market open on Sunday night, and that's what they've done, which I'll get into in a bit. SVB's already closed down their website. So if you're a customer now, you must be pretty worried this weekend. You can't even log in. Federal Reserve calls emergency meeting. That's what I thought. The Fed will come in and save the day as they always do. The FDIC is looking to auction off SVB, so we may see a buyer or a merger come out. If someone can one of the bigger banks can put together a big deal, and who knows, maybe even Elon Musk, he hinted at, be open to the idea of Twitter taking over it, turn to a digital bank because it's in Silicon Valley. So this is possible. We may see, a buyer come in and overtake it. Otherwise, it'll just be wound down. Jeffrey CEO says merger is best. He said it should occur today. Would be the best solution. Hedge fund manager Bill Ackman warns of economic meltdown after collapse. He did a rambling 649-word, one-paragraph tweet, billionaire. And we all know how big a heart Bill Ackman has and how concerned he is for all us retail deposits. Just like when he came on CNBC crying about the market is going to collapse in March 2008, and he was really short, made a couple of billion, then turned around and went long and made another couple of billion. So we know Good Samaritan Bill Ackman wants the government, wants the taxpayer to come in and save the day. And look what's just happened. Just breaking news. US government steps in, says people with money deposited at SVB will be able to access their money. So fear not. All the deposits will, in excess of the FDIC, insurance will be backstopped by the government. So they're not going to, let fear and contagion spread. That's why they've come and announced this just as Sunday futures have opened. Let's take a quick look. Yep, up. We got E-mini up 1.2%. Russell up 1.7%. Dollar is off a bit, 0.29. Gold's up 0.96. I was long that as well. And if you've been watching the show, you knew I got long the Bank of the Ozarks on Friday afternoon as well. So that looks like it's going to have a good bounce today as well. But to recap, let's go back and have a look at the timeline of events. So we had Gregory Becker, CEO, sell stock on the 27th. So did Daniel Beck, the CFO. So that was the 27th of Feb, right here. We had Jim Cramer also recommended the stock on Feb 8 as one of his top 10 buys. Cheap stock, Feb 8, right here. Then 9th of March, that was Thursday, 105. We actually dropped on Friday pre-market, 39. So from a stock that was trading over 300, Jim Cramer recommended it. CEO, CFO bailed on it. By Friday afternoon, it was 39. Now it's going to be zero. Equity holders are likely to be fully wiped out, and depositors will get their money back thanks to a government backstop. But yeah, the company didn't hedge their interest rate. They took in a bunch of deposits. They couldn't farm it out to loans and credit cards. So in their infinite wisdom, they put it all into long-dated treasuries with a 1.5% coupon, and they didn't hedge any of their interest rate risk because they thought they knew the interest rate market, and they thought it would be smart to not pay for hedging and just be completely exposed. And then the CEO and CFO dumped stock onto the public in addition to their exuberant salaries. And now the rest of the system's left to clean up all their mess. So personally, I believe they should give all their money back of what they sold from their stock and their salaries from the last year at least. And why not give them 5 years in jail and actually encourage the system to not take these crazy risks with other people's money? Because maybe if the CEO and CFO have to give back all their profits from the last 2 years at least, and they spend a few years in the slammer, maybe that will incentivize other CEOs not to be so careless in their risk taking and jeopardize the whole system and a lot of deposits and companies. So actually have some accountability would be good to see. If you agree with that, let me know. Or let me know what you think should happen in the comments below. What do you think should happen with Greg Becker, the CEO? What do you think would be a fair way to deal with him after what him and his company have caused here? And what do you think about this whole system? So yeah, understandably, there's a lot of people angry and outraged about this, and me too. Even though I didn't have any SVB stock or deposits, I don't like seeing this happen to innocent investors and depositors, that are just like us, just normal or regular retail suburban guys getting put through this mess. I saw it happen with GFC with some close friends, and I just hate to see it again. So yeah, it doesn't sit too well with me. And hopefully there's some proper, unlike the GFC, when none of them went to jail, hopefully this time we see a bit more accountability, and hopefully the government deals with it in a proper way. Because if it was any of us, costing people billions of dollars, would be in jail for life. But let's see what happens to Greg Becker. All right, guys, thanks for watching, and this is an unfolding fluid situation. Check back in tomorrow afternoon after market closes, and I'll let you know what's going on, because I do a daily market analysis update with all the latest data and news. All right, guys, take care out there. I'll see you tomorrow.